Like, I get it. I get that, right? Like, a lot of times you want to kind of have your main job fund your potential startup, but like just saying, I'm waiting on this funding to start work, anything. So that's a huge no-no. You got to kind of put in that upfront work to de-risk it, not only for investors, but for yourself, more importantly for yourself.
Welcome to Inside Startup Funding, where you get to learn about raising capital from early-stage startup investors. We talk about what they're backing, how they decide, and what the world looks like from where they sit. I'm Helena Fogarty. I'm a fundraising expert who helps startups raise their seed and Series A rounds. And today, I'm speaking with Mike Chan, managing partner at Deep Ventures. Deep Ventures backs early-stage startups in crypto, AI, and deep tech. But how it backs them is part of what makes it interesting. Deep Ventures operates as both a syndicate and a fund, and those two things work very differently in ways that matter a lot for founders. Mike has over 20 years of experience across venture, marketing, product, and operations. And before running Deep Ventures, he was a startup founder who led growth for several blockchain companies. He's a mentor at Techstars and Bitcoin Startup Lab, and he went to Lehigh for material science, Georgia Tech for industrial engineering, and NYU Stern for his MBA, where we actually overlapped for a year. Let's get into it. It's a lot of schooling, Mike.
I know. My wife always gives me a lot of crap about that. I'm like, I think I'm going to pick up another degree every now. She's like, no.
It's amazing. So take us back a little bit,
Sure.
because you have, kind of a winding road.
Yeah.
With some degrees.
Yeah.
How did you get into investing?
Yeah, it's hugely winding road. I think maybe we'll kind of save a lot of the kind of way background for later time, but essentially, I was a founder, like you mentioned. I didn't quite take those startups as far as I would have liked, but I just,
Hey, me either. There you go.
it's tough. And as an investor, I have this amazing amount of like empathy and sometimes sympathy, for the founders that we work with. So, didn't take those in as far as I would like, but through that journey, discovered Bitcoin in 2013.
Yep.
It was at $94, so that was my wish
It's a
I bought
bargain.
more. Wish I bought more
Amazing,
story that
right?
many of us
Yeah.
have. Didn't quite jump into crypto, but right around 2016, 2017 is when I was like, this is going to be too big. This is going to be too transformative. So I started operating in the space, leading marketing teams, and one of a couple of the projects that I worked for, my partner at Deep Ventures invested in.
Mhm.
So then I just kind of reached out to him and said, hey, want to learn more about the venture capital side, and he's like, yeah, let's work on some deals together, and then that's how I got here.
That's pretty cool. Did you ever consider like moving to Miami as part of the kind of crypto bro world?
Miami had its day like right around like COVID, right, when everyone in New
Yes.
York and everyone in like California is like a lot of people moving
Wasn't
to
the
like
mayor like the
Austin.
crypto dude?
Yeah, and that kind of fizzled out a little bit. I think it's picking up a little bit now. But yeah, like the mayor was huge on Bitcoin. I never, I like Miami. I like to visit Miami. I never really saw myself, kind of the South Beach type. But yeah, I think it's making a little bit more of a resurgence now.
Yeah.
Yeah.
What was the landscape like when you purchased it? What did it feel like when you got into Bitcoin?
I was really lucky. Like,
Mhm.
I did not kind of seek it out. So I'll tell you a little bit of a story. So I was working on my startups, and I've got like engineering degrees, but like I was never a computer scientist or anything like that. But so I was learning how to program. Very different back in the day when you actually had to learn how to code instead of just have Claude kind of spin up an app in an hour. But so I was learning how I took a course. It's like a Stanford, online course. I think it was on Coursera
Mhm.
that was taught like Balaji Srinivasan, and anyone in crypto knows Balaji. He built Earn.com. He was a CTO of Coinbase, and now he's just this kind of influencer, online influencer, philosopher.
Mhm.
And he was teaching a course on JavaScript, and he had us build a very simple web crypto wallet using JavaScript.
Cool.
And as part of that, we had to go to Coinbase and buy a little bit of Bitcoin to store in that wallet.
Yeah.
And that was my first foray into Bitcoin. Again, it was $94. I had no idea what I was buying.
Amazing, right?
Yeah,
Incredible.
threw some money at it.
Yeah.
Should have smashed the buy button a
Yeah.
lot more. But that was kind of my first exposure to Bitcoin. It was sitting there for a little while, and kind of just like I was on Twitter and just realized, it started pumping a couple years later, and because it was definitely pretty low around that time when I first bought it, and I just kind of picked it up and it's like, okay, went down the rabbit hole, read the white paper, learned about Ethereum a couple years later, and then that's kind of been the focus of my career ever since.
Yeah, amazing. So how did you feel when it has bottomed, or not bottomed out, when it has gone down
Yeah.
significantly?
Yeah.
I mean, there's been times. I can't remember off the top of my head. I usually remember these market dips, but not with the not with crypto. How has that felt for you?
So
Because I know some people that have been heavily into crypto who were like, I just lost like 60% of my net worth.
yeah, yeah. I've never been I've never been the kind of person that like focuses on the price every day.
Mhm.
I think I've just like built over the years just so much conviction in the space
Yeah.
long term that I don't ever really sell. I've only sold crypto once, and this is not Bitcoin, but I've sold crypto about a year and a half ago to put a down payment on the house that I live in New Jersey.
Yeah.
And that
good.
hurt. That
Yeah.
hurt really
Yeah.
bad. Like to hit that sell
Yeah.
button. But it's kind of it's life, right? Like
Mhm.
that's kind of what it's.
That's
You
what it's
make
there
an
for.
investment
Yes, exactly.
and you cash out.
Yes.
Investment's up, and that's what it's there for, right? You gotta live your life. So it did hurt, but like I'm just long-term permeable, and yes, it absolutely goes. It's very cyclical. It goes through its ups and downs. But especially like as an investor, I don't a long-term investor that we invest at the earliest stages. I'm really not at all concerned about the day-to-day fluctuations and the volatility
Yeah.
of the liquid market. Certainly it's a part of everything. There's timing, there's all that. But yeah, I mean, I'm just very long-term oriented, and I know that it's whatever the crazy predictions that like Michael Saylor or any of these big Bitcoin bulls are making are probably a little bit outlandish, but like the general trend of it going up over the long term, I fully believe it.
Yeah, absolutely.
Yeah.
So when you started investing with Deep Ventures, were you just joining as part of the syndicate, or how are you handling that?
Yeah. So I joined the syndicate, and this was it was about 2020 or late 2022, 2023, and it was like I mentioned, my partner at Deep Ventures, Sherman, he started the syndicate in around 2020, and had made a bunch of investments before I jumped on. But it was tough because right around 2023 it was the depths of the bear market.
Yeah.
So like, it's funny, I make a joke, half kidding, where when I was doing some of these. I was doing some of the first deals, and I'm writing these like 8 to 10 page in-depth deal memos, like digging into the founders and really analyzing the market, because it was a tough time to people. It was one of these.
People weren't investing.
One of these one of these market drops, and people weren't really excited about investing. I think we're kind
in
of
anything,
in it,
not just
exactly. It
not
was
that
it was
space.
very macro,
Right.
and. I look back at some of the crypto deals that were done in like 2021. It was like, we like the founders, send us money by tomorrow,
Yeah.
essentially,
Yeah.
right? So it kind of just shows you, how macro impacts, even early stage investing when timing is looking forward, many years. So it's just kind of investor sentiment, especially in a syndicate, you're pretty, you're way more sensitive to that because you have individual investors that you have to aggregate money from.
Yeah.
And we could talk a little bit more about this difference between syndicate and fund. But when that was it, it's like, I was really excited, kind of just out of the gate, super excited to make deals. And, I'd been talking to founders for a long time, being a founder myself. I had a podcast that talked to founders. So it was like super, super excited to like actually work with them and fund them and have kind of a long-term relationship. But it was a really tough market when I first started. Yeah.
How do you deal with being a former founder and making investments now. I mean, now you've been doing it for a few years,
Mhm.
but when I think about if I ever wanted to go into that space, I feel like dealing with the pitches and the hopes and dreams and the high stakes on one side of the table would be difficult for me. Do you ever how do you deal with that? How do you manage
Yeah.
getting thousands of pitches sent to the fund
Yeah.
every week, probably at this point,
Mhm.
and each one feeling very high stakes on the other side?
Yeah, I have a high level of empathy,
Yeah.
for founders being a foreign founder, and I think that makes me a better investor,
Mhm.
right? I think you've got kind of people who come from maybe traditional finance or whatnot that come in as a VC, and certainly they can be very good investors, but if you never founded a company and never went through kind of that hell, you just a little bit more disconnected to that
Yeah.
reality that they're going through.
Yeah.
So yeah, I just try to be as helpful as possible, even if we're not going to invest in, try to get back to them. Like you said, sometimes the volume just gets too big to be able to respond to
Yeah.
everyone and to provide kind of helpful feedback for everyone.
Mhm.
Just try to do that as much as possible,
Yeah.
because yeah, it's tough. Fundraising is tough, especially now. Being a founder is tough,
Yeah.
and yeah, I mean, I just try to put myself in their shoes as much as possible because I have been there, and it is an absolute slog. Just whether it's just fundraising or just operating a company day to day,
Yeah.
it's tough. So you gotta really be into it, gotta really love it, and we try to just be as responsive and friendly as
Yeah.
possible.
Cool. So let's talk about how Deep Ventures is set up.
Okay.
There's the syndicate and
Yep.
there's a fund.
Yep.
When did the fund kind of come into being?
Yeah. So the syndicate broadly was broadly deep tech, which included crypto, AI, and
Food?
aerospace, some food tech, some biotech, pretty broad.
Yeah.
And I started in 2023. My main focus was crypto. That was my background. But I'd been involved in some of the other deals as well. And so the syndicate has still running, but started in about 2020, and it's still around now. But we spun up the fund in early 2025.
Cool.
And it's crypto only.
Mhm.
So every crypto deal comes through the fund first.
Yeah.
And so we can still do, and we still are doing some AI, some deep tech through the syndicate.
Mhm.
Now, where they kind of can interact is if we have a crypto deal that we can use that we're going to invest in through the fund, we can use the syndicate for fund LPs if they want to double down on it. They can put more money into that, and we'll run it through a SPV through the syndicate. And also, we can let in some of the other the other syndicate LPs into that deal as well. But the fund, if it's a crypto deal, has to go through the fund. And then anything outside of that of crypto, we can do through the syndicate. Also, follow-on deals we could potentially do through the syndicate as well, because the fund is relatively small, and usually with a small fund you don't really save reserves for follow-ons. So yeah, we can definitely get more exposure through running an SPV through the syndicate.
And when you don't have to answer this, but the SPV is probably set up similar to a fund in terms of having some having some administration costs built in. Like, is that part of? I don't know.
Yeah.
I'm asking. Yeah.
So we usually the only fee that we charge is to run the SPV. So we'll use one. Usually our SPVs run through AngelList. Historically, we've used other platforms. But yeah, it was just whatever fees are to pay for those administrations. We don't take like a management fee through the SPV.
Okay.
We take a management fee through the fund because
it's normal.
Yeah, that's very normal. But then we'll typically take typical carry, 20% carry on SPVs. Yeah.
I've seen some people running SPVs and building in some sort of administration cost into that. Very upfront, very transparently, but that's what they do. Yeah.
So it's funny you bring that up. I was just quoted in an article in the New Yorker,
Nice.
which is fun. And we talked about with the writer Kyle Chayka, the AI, the craziness around AI SPVs.
Yeah.
And there's all these layers involved. And you saw a lot of news came out where Anthropic said that, if, any stock issuance or that is not explicitly approved by the board is worthless, right? And that is a result of this craziness where you've got people who are just aggregating money to get into Anthropic, OpenAI, SpaceX before the IPO, and they were just getting in second and third layers where, yes, they were charging those fees, and they were upfront fees, and some of those fees are really ridiculous, 20%, 30%. But also it's like
That's
there was
high. That's very high.
very high.
Wow.
And the opacity of the actual access that they have, a lot of it is not legit, right?
Wow.
They actually don't. So a lot of investors are getting scammed out of their money, and that it's kind of just a result of this really this crazy frothiness in AI and yeah. So all the SPVs that we've done, most of them are. The vast majority are just direct equity from the team, and that's kind of the cleanest way to do things.
Yeah. So when you find a company you want to back, let's say it's crypto.
Yep.
So it's eligible for the fund.
Mm-hmm.
Walk me through how you get to a deal. Like you've already talked about this investment. I don't know if it was an investment memo that you wrote about the founder back in 2022 or 2023, the eight pager.
Yeah.
But how do you make a decision?
Yeah. So there's kind of the process, right? Like we will get we look at all of these deals, as many as we can. We're not one of the firms that says you need a warm intro to come in. Like we found cold outreach is fine. Obviously there's ways that you have to do cold outreach to get our attention. Warm intros are great too.
Yeah.
So we'll get that initial pitch, whether it's email, Telegram, LinkedIn, and okay, first it has to fit our thesis, obviously, right? But it also kind of has to check a couple of early boxes. Like we're not really into looking at kind of copycat. There was a time where if you had a decentralized exchange on Ethereum, you can just build one for Avalanche, and that could be a good investment, right? Like, great, that's fine, you can make money on that, but that's not really moving the industry forward, right? So really something with that's unique, it has impact, and is kind of a innovation is one of the things that we're really looking for. And we look at how at those early stages the founder is just is the key, right? The founding team, and we look at does the founder have some experience, some kind of. It doesn't have to be perfectly aligned, but because with crypto, a lot of times it's there's just a lot of new things being built in crypto that founders won't have experience in, right?
Yeah, because nobody has experience in it.
Yeah, exactly, right? But is there something that shows that this is the right, at least in this very early review stage, shows that this founder has some kind of experience that applies to what they're building now, right? And then we'll once kind of pass those filters, we really dig down into, especially in crypto, into the understanding of go to market, and because in crypto a lot of this is open source, and so the tech can't be the moat, right? So it's how do you get distribution? How are you going to sell? How well do you understand your customers? And
I think that's more important across the board. Period.
Yeah.
It used to be something that was not as at the forefront, but I think across the board, everything's so easy to replicate right now.
Yeah.
That your moat has to be your go-to-market and the amount of people you have on your platform.
100%.
How easy it is for adoption and how sticky it is.
100%. And also, so that comes back to the founder thing, right? does the founder, through their like past experiences, through their networks, do they have access to those customers somehow?
Mm-hmm.
Did they build a network in that area that they're pursuing now
Yeah.
to be able to have a leg up on distribution,
Mm-hmm.
right? And then, that also lends itself to kind of the third area that we look at is even in pre-seed, we look for traction.
Yeah.
Right. So traction doesn't have to be, I mean, a lot of the times we invest in ideas,
Mhm.
pre-product, certainly pre-revenue for the most part, but like, was the founder able to kind of validate their hypothesis somehow around this product, around this market?
Yeah.
Like, so that tells us a couple things. One, they have the access to this network. They're on to something. They're directionally right, even though you can't really tell at those early stages, right? Like, I mean, just a little bit of data.
Yeah.
But two, it's like, all right, they already put in work, right? They're already understanding how to like test their hypothesis, how to kind of de-risk it, not only for investors, but like for themselves,
Yeah.
right? They're going to dedicate,
important.
they're going to dedicate, their nights,
Yeah.
days, nights, weekends, years. How do you know you're building something that people want? And doing that, whether it's just like, I don't know, running some ads to get signups, or whether it's like getting like letters of intent for like a launch partner or something like that, just to kind of show that one, there's interest there from your end customer, and two, you're putting in the work before
Yes.
coming to investors.
Yes.
Right? So
Thank you for
yeah,
saying that.
yeah. 100%.
Because I mean, I see so many founders being like, well, once we raise the money, we're going to do X, Y, and
Right,
Z to
right.
get we're going to
Yeah,
get
I'm gonna quit my
customers.
job once we
Yeah.
get the money, right? like I get it, I get it, I
yeah.
get that, right? Like a lot of times, you want to kind of have your main job fund your potential startup,
Yeah.
but like just saying, oh, I'm waiting on this funding to start work.
For anything.
Anything.
Yes.
So that's a huge no. And yeah, you got to kind of put in that upfront work to de-risk it, not only for investors but for yourself, more importantly for yourself.
Yeah.
Yeah.
So if you have a deal that you're investing in the fund,
Yep.
and you're thinking you want to bring some of the syndicate in,
Yep.
how does that work? Like, how do you get in touch with the people that might invest?
So so let's say we did the deal, we signed the docs for the fund. Actually, we're potentially going through this right now. So this is the first time we're actually gonna do it. But like, we've got 1,300 people in our syndicate.
Yeah.
On the AngelList syndicate, and we've got a like a online community with like 400. There's some overlap there. But yeah, we've got the channels of communication that we've worked on for years to be able to and built this audience for years to be able to do that.
right?
So it's great. Yeah, it's great.
Yeah.
So maybe it's just 10 of those 1,300 that come to the deal, with checks of 10,000 each, right? Like,
Yeah.
it doesn't have to be that many people. So building up that audience is something that's super valuable. We would just write up a deal memo, likely 8 to 10 pages, in depth as possible, right? And distribute it out there. We can sometimes set up calls with some of the set up like a webinar if some people want to meet the actual founder.
Yeah.
Answer questions. We'll distribute all the docs and data room, and yeah, it's it's a sales process actually, right? It's just like so many other things, just like fundraising, whether it's founder fundraising or us fundraising.
Yeah.
It's a sales process. You need to build conviction. You need to provide your way of thinking and how it could benefit and why you're thinking that way. And we've built out a solid audience of LPs that we can get the deal out to pretty quickly.
Can you tell me as much as you want to share about how you've built that community of LPs? Like, how do you communicate with them and make it worth their time?
So part of that is just the kind of natural doing the deals, and then AngelList helps a lot with that. Being able to, they've built a massive community of LPs, and we were able to kind of build our sub community on AngelList.
Got it. Yeah.
And but also it's just being in the industry for many years, we build all these relationships of people who have worked for all these crypto companies and we've interacted with, and sometimes they want to get into angel investing, and we're able to bring them to the platforms. Yeah, it's just a constant kind of relationship building across multiple platforms. Whether it's the online platforms or just attending events and building networks, people that you work with. So it's always like that's kind of like what you always have to constantly do all the time.
Yeah.
You never know when you'll need to leverage that community, and you never really know when where invest as tight of a process that you can run. You just sometimes the sales process is so unpredictable.
Yeah.
That you never know where an investor is going to come from, or where an investment is going to come from.
Yeah, I tell that to my founders that I work with. Is sometimes like you're out there, you're shopping your deal, I guess, you're pitching, and then sometimes an investor that you haven't spoken to can actually come to you because they've heard about the deal.
100%. Yeah.
And we had on closing the seed a few years ago on a company now that we're doing a Series B, we had a family office come out of nowhere.
Okay, great.
And be able to close in 2 weeks.
Yeah.
So that was pretty awesome.
Yeah, and a lot of times founders won't have access to family offices. Like there's not that much information about family offices out there.
On purpose.
Yeah, probably. So usually those aren't on the founders list, and sometimes it's just by chance that these investors come on to get onto your cap table.
Yeah. But they're able to close sometimes pretty quickly, which is amazing.
Yeah, that's a nice thing about family office.
During a dead time, like it was December 15th, I think they made the pitch, and they were able to close on December 29th or something. It's crazy.
Yeah, and that's another thing, right? Like you get some family offices, they have so much flexibility, right? You get some family offices that are just like, boom, I'm in. And then you've got family offices that like you need to build multi-year relations. So again, this goes back to that point. It's like so much of this is unpredictable. But that is really just the world that we live in, whether you're a founder or an investor. A lot of it just happens by chance.
Yeah. I'm just looking at my list of questions because we've gone through so many things.
Yeah.
Let's talk about the exits that y'all have had.
Okay.
How did those happen? What were some early indications that they were going to happen? Were they good outcomes? I have so many questions.
Again, like, it's so unpredictable, right?
Yeah.
Like, starting from the very beginning, like, what did we see in those founders? Look, to some extent, we saw those three things that I mentioned, right?
Yeah. Past
experience, understanding of go-to-market, understanding of or getting some traction. Like one of the things that is the most important but toughest to identify is like what is this founder? Who's this founder going to be when times get tough?
Oh yeah.
When money's running out. When that customer just backed out of the deal.
Yeah. That
could have changed the trajectory of the company. It's so hard to predict that, right? But I think we get a lot out of understanding like the genesis story of why the founder decided to start this company. It's a question that we always ask. And you can kind of wade through the BS sometimes, right? Like
because there's a really nice story. Everyone has a really nice story.
Everyone comes up with nice stories, right?
Yeah.
But like it's kind of the sense of like you can recognize these things after kind of pattern matching and having a lot of these conversations, and like you can sometimes just tell that like this person has been thinking about this problem, and thinking about his or her solution, like for a long time, and that is highly correlated to like when things go bad, how will they react? Because you've got that true passion for the problem, that there was some maybe like moment of reckoning that said, oh my God, I need to solve this.
Yeah.
It doesn't always come out, but it's when it does, it's clear.
Yeah.
And I think that is the one, we always ask that question, what's the genesis story? And the strongest genesis stories, the ones that you tell are like absolutely authentic, are the ones that usually end up well.
Yeah. I mean, yes, I think that's important. And something that came up to me just yesterday is the importance of kind of the macro environment, the
Mhm.
winds being at your back for certain founders.
Mhm.
Like, it seems like, yes, everything you're talking about is really important. And then there are some people that they're probably passionate for the problem as well, but they just happen to be in a space that's very opportunistic
Mhm.
and they can take advantage of that.
So interesting. Okay,
Yeah.
so let me.
Yeah. Talk to
Yes.
me.
Yeah. So specifically in crypto,
Mm-hmm.
where you have the peaks and valleys,
Yeah.
right? And maybe this is maybe we'll dig into this a little bit, but like we when the market is down, the ones who are still building in that market
Mm-hmm.
are great to invest in because they're true believers.
Yeah.
And they're clearly not taking advantage of a frothy market, right? We're seeing a little bit of the opposite in AI right now,
Yeah, yeah.
right? But with crypto, market has mostly been down for the last few months, and like the people who are building now are the true believers,
Mhm.
right? Also, talk about like valuations are a little bit more reasonable when the market's down, right?
Yeah.
Because that frothiness is lacking. But like if you talk about timing, the market's going to come back, right?
Mhm.
So like they're building now and they
Mhm.
could
They can
potentially
take
take
advantage.
advantage of the market.
Right.
So is that like what would you say? Or like, yeah, could talk about like, is that because those aren't really tailwinds at the moment,
Yeah.
but they could be when the timing is right, right?
I
Yeah.
mean,
So,
let's say that's what I was talking about.
okay,
So I don't
okay.
want to get specific.
Okay. Yeah.
I just was watching, I just did a deep dive into a company in AI
Okay.
over the weekend
Yeah.
because they're only 4 years old and they're
Okay.
grown massively.
Yeah.
And the
Sure.
founder had 1 year of experience in the area
Okay.
and paired up with someone else who is an AI, and like they just happen to be, it's very opportunistic.
Yes. Yeah. Yeah.
And so you take these very young founders
Yeah.
without a lot of life experience, and they've grown a massive company.
Yeah.
Because it's a frothy market, but also the growth is just
Yeah.
incredible in
Yeah.
AI right now.
Yeah. Well, okay.
Yeah.
So that's actually, I think we're actually kind of agreeing there because that was 4 years ago. That's like a lifetime in AI.
Mhm.
So they were actually started at a
Truth.
pretty
Yeah.
good. I mean,
Yeah.
ChatGPT came out in right around 4 years ago,
Yeah.
right? So
Uh-huh.
actually relatively
Yeah, you're right.
early and kind of rode the wave.
Okay.
So
I'm
starting
reinforcing the
now would
point.
be a very different, right? If they started now, they'd be very different. So all right, great.
We're in alignment.
perfectly.
Let's see. So when you meet a founder for the first time, what are you trying to figure out in that conversation when they're pitching you?
Yeah. I mean, look, I think you can see a lot more in person, right? With and whether a person
Do you
or
meet people in person?
I do.
I mean, we're here in person.
Yeah, of course,
Wow.
Yeah, I try to, right?
Yeah.
Always. I think Zoom does a good enough job to get that kind of initial impression,
Mhm.
but meeting people in person, mannerisms, just you get a kind of different level of who they are and what they represent.
Yeah.
And so either way, like I'm really still trying to kind of flesh out those areas of like what like why are you building this thing? What's your reason of raison d'etre, right? Reason of being for this company, and just what their values are, and yeah, how are they approaching company building, and what do they see in the future? Just kind of teasing out all those things, and I talk to a lot of people, see a lot of decks, but yeah, kind of having that getting that impression through whether it's a video chat or an in-person meeting takes it to the next level in terms of being able to really understand the person and how well they'll do.
Don't you get tired of looking at decks?
Yeah, well, I'll be honest with you. There's a point where I'm just like, okay, all right, you've seen a million things, and you're just trying to like tease out. And this is a tough part of business. Like so much of our job is saying no.
Yeah.
Which kind of sucks.
Yeah.
But like it's just a fact of life. Like you're always. Yeah, I'm not saying you. We're looking for reasons to say yes,
Mhm.
and Sometimes that comes down to to like one slide
Yeah.
that like pops. Sometimes it's more of a aggregation of factors. But yeah, like you're just looking at thousands and thousands of decks, and sometimes you just really need to like hunker down and get through them, and it's tough sometimes. But always looking for that reason to like say yes and move on with that founder.
Yeah.
Yeah.
In an area that's evolving so quickly, how do you stay on top of like your knowledge and your ability to evaluate deep tech and crypto?
I will say that um, AI has been massive in terms of like being able to kind of aggregate information, aggregate news about the industries that we're looking at. Instead of me going out and seeking it,
Yeah.
right? It's getting pushed to me now.
Yeah.
And I think that just getting those summaries and talking to a lot of the people in my network about who are have more of an expert level understanding of things outside crypto. I think like I got a pretty good handle. But even then, within crypto, there are spaces that there's still a lot of subject matter that are in sub areas that I don't monitor as much.
Mhm.
So and also AI has helped. Just having constant conversations with other investors, other builders. A lot of these conversations that we have, don't necessarily lead to anything, but
Yeah.
like it's just kind of knowledge gathering and getting other people's understanding, other people's points of view of areas that I might not be fully immersed in.
Cool. What do you think founders consistently get wrong when they're pitching you?
I think so. I think especially in the early days of crypto and now with kind of in general like deep tech is such a focus on the technology itself,
Mhm.
right? We talked about a little bit in crypto on why the tech is mostly open source and it kind of can't really be the moat. But the tech is definitely important, no doubt about it. Especially in deep tech where you've got these innovations that very technical innovations that can be the life of death of your product.
Yeah.
But again, like totally ignoring how you're gonna get customers. Right? So like if we build the tech, everyone's gonna come. Like,
Yeah.
no, that's not true. So like that's the one thing where like just overwhelmingly focus on the tech and not focusing on go to market and understanding your customers as much as needed.
Yeah. And can you think of like the most recent best thing a founder said to you?
So I don't know if there's like a one specific thing that founders said to me, but like what I love when founders say is like when they ask me how I can help them,
Yeah.
and like they ask me how I am a good fit for them, not how their company is a good fit for my portfolio.
Yeah.
Because that tells me a couple of things. One, that tells me that they're not just out for money,
Uh-huh.
right? They're not just looking to raise funds just because of the money. Like they want a partner.
They are, but they're evaluating
Well,
partners.
Yes, correct. Yes. Yeah. Not just for the money. Yes, they need the money, but not just for the money, right? They're evaluating partners. They're evaluating people who want to be on that road with them for a long time and that can actually add value beyond the money. So yeah, not one specific thing, but like I really like when founders ask for help. Like you should be asking your investors for help all the time.
Yeah.
You might not always get it, but absolutely should be asking 100%. So I like when founders say that. It's not one specific thing, but I like when I hear that.
Very cool. What do you think the convergence of AI and crypto is kind of developing into? I mean, what is it creating? What does it open up the world?
Yeah, so I think it's there's our thesis around this is there's two primary categories. One, how AI can help crypto, and then how crypto can help AI.
Oh.
And let's start with the first one, how AI can help crypto. So we're actually seeing AI being kind of an attack vector for crypto, where these models are like scanning this open source code and finding vulnerabilities.
Yeah.
Now that could be good or bad, right?
Right,
One, obviously a hacker can use AI and hack a protocol.
Yeah.
But two, you can be a white hat hacker, and you can look for these vulnerabilities and patch them up before any evil guys can come in and hack, right? So, and there's a lot of things. There's like the data analysis around all the blockchains. You can use that for trading or anything like that, right? So that's AI helping crypto. And I think we'll even see agents, right? You can have agents manage your crypto treasury, make payments on behalf, and then there's a lot, even eventually kind of manage crypto teams and automate a lot of processes, right? So that's great. AI helping crypto. Now, crypto helping AI is kind of in the same thread. Like, agents are autonomous. They need permissionless autonomous money, right? Stable coins, crypto. But I think there's kind of a larger problem. Like, if you're talking about AI, you're likely talking about 4 or 5 companies right now. OpenAI, Anthropic, Google, and that's. I don't think people realize that that's a problem yet. But I think there's things bubbling up, right? Like, in all of these content creators, whether you're a publication like a major newspaper, just a blogger, like all of your data, all of your output is Stack Overflow is a great example, right? Like, all of these programmers put thousands of hours answering questions, learning from Stack Overflow. That site is dead now because of AI. So you've got that knowledge base.
That's wild, right?
Right? It's completely dead. You've got all these knowledge bases and these publications that are essentially getting their work just taken from them, and then their business models kind of
pirated.
Yeah, right. You've got these models. They're taking in all this data. They're with no kind of compensation to the. You don't even know what's going into these models, whether it's data or the weights or how they're being built. You've got these massive AI companies that the reason why they are so powerful right now is because they've got so much data and they've got so much compute. If you've got a builder in Southeast Asia or Latin America, they cannot afford, if they may have the greatest ideas, they cannot afford to access compute to build whatever they need to build in AI.
Yeah.
And so, similarly in the vein of how crypto and blockchain has kind of taken out a lot of middlemen for getting loans or just access to certain assets. That similar philosophy will be applied to AI. So you can decentralize data acquisition. You could decentralize model building. You can decentralize even data creation, right? So like if there's an AI ecosystem called BitTensor that we've invested in what's called a subnet there, where it's basically the Bitcoin of AI. Very decentralized. You can just permissionlessly build a specific use case of AI. You could build models by running the subnet. All the incentives are aligned. And I think that's a lot of what crypto can bring to AI is incentive alignment around all these very important layers of the AI stack, and also verifiability. It's like agents, deep fakes, all that stuff. If you can verify that a certain person created this at this time, and this is actually that a video of that person. So there's so many, and it's still so early. There's so many applications, but I think that is kind of a very long-term problems of AI that no one really quite realizes the kind of power aggregation that's happening right now. And I think that we need to be able to decentralize that more to be able to align incentives and kind of have more fair.
Yeah, I think the verification is really interesting.
Yeah.
Something that also came up for me this weekend was thinking about like the edges of ethics and morality being blurred at this point.
Yeah.
Because exactly what you're talking about, where companies have pirated other people's work
Yep.
to feed the models.
Yep.
So what's to keep individuals from doing that? Like,
Yeah.
who cares? Like, you wrote that book. Does it really matter now?
Yeah.
Why don't I just put my name on it?
Yeah. True.
I mean, slightly different words in the book, but like, what is the IP at this point?
Yeah. I don't know.
Yeah.
It's very gray.
Yeah.
There's still, and look, like there's different approaches to solve this problem, right? Regulation certainly is one of them, but you know how that goes, right?
Yeah.
It always lags.
Yeah.
The technology moves too fast for regulators to do that.
By design.
But yeah,
We like that.
yeah. But then there's aligning incentives, right?
Mhm.
Like if you have a incentive to take part in the system, and that's a fair incentive, and it's distributed widely,
Mhm.
and it's fair, then more people want to get involved. And I think it's going to take and that's one of the things that crypto does. It coordinates resource. It's the best coordination mechanism for resources.
Yeah.
And that'll 100% confident that will be proved out.
Yeah, you were a true believer. of it.
True believer.
Yes.
It'll take a long time because a lot of times the industry has been co-opted by. I'm gonna write a book that's gonna be titled "The Catch 22s of Crypto."
Yeah.
Because for every bad thing that happens in the space,
Mhm.
there's a good thing that's happening.
Yeah.
And this is kind of the nature of a open permissionless system.
Mhm.
And there will be a day where everyone realizes that everyone's enamored with AI, but like we're gonna see that there's some people getting around to it now, but like there's a lot of problems with this power centralization amongst a handful of companies.
Yeah.
And we need to open up that at every layer of the AI stack.
Yeah.
I could go on about that forever. So
exactly. I was like, we could just,
Yeah.
but we're gonna close this.
Sure.
We can talk about this offline. But what's something that you believed about investing that you got wrong?
I mean, as an investor, we've got a lot wrong, right? That's kind of the nature of the game. I think that, I guess maybe just like the way that I've like learned to analyze founders and companies.
Yeah.
And also learned this as a founder as well, and I apply it to investors. Like founders' obsession with competitors
Yeah. Tell me more.
That is so misguided.
Nice.
And as a founder, I was absolutely obsessed with like
Make me
competitors,
so angry.
right? Like,
Yes.
so like it takes up so much of your mind share that it's a huge net negative. The first thing is that, look, one of the things is like when a founder pitches and say we don't have any competition,
Yeah.
and they like say that with confidence,
Yeah.
like huge red flag, because one, competition is good.
Mhm.
It means that there are other people that are seeing this problem and solving for it. It means that there's there's a market there for it.
There's money there. Yeah.
Right. But you have to be very honest with yourself about who your competitors are, right? Like, and the best thing is like, yes, these are our competitors, but this is how we're doing it differently. This is kind of the white space that we're attacking.
Yeah.
And two, like that's the whole thing. It's like it just takes so much of your attention away from what you're trying to build. Like, you're not going to fail because you have these competitors that necessarily eat your lunch. You're probably going to fail because you like didn't do something,
Right.
or you didn't sell hard
couldn't
enough,
make it happen.
right? You couldn't make it
Yeah.
happen, right? And that's
Yeah.
that's kind of reality. Like, look,
Mhm.
95% of entrepreneurs fail.
Yeah.
It's not because of your competitors, right? Like it is 100% not because of your competitors. So don't focus on that. And I see that, and I've learned a lot about like how to assess a market. If there's a market with like 30 competitors, versus a market with like 3, that there's a lot of other nuances, size of the market, et cetera, et cetera. But like I've learned to, I was wrong about that as a founder. I was initially wrong
Yeah.
about that as an investor. Sometimes, still going to be wrong about it in the future. But I think it is good for founders to know that don't worry about competition. 1% of your time just to kind of scan the market is
Be
fine,
aware.
and have these comparisons.
Yeah.
But they are not going to be the reason why you fail or you win.
Yeah. Nice. Any other last words you want to say before we close this?
Yeah, just another thing, a point for founders, I think,
Yes,
is
please.
don't raise. You want to raise money from a position of strength,
Yeah.
right? Like, you don't want to wait till the time where you're like desperate to raise money, right?
Yeah.
You want to have that traction. You want to have that, that go to market, understood deeply. You want to be able to bring on good partner investors instead of just taking any money, right? And how do you do that, right? You learn about your customers, get close to your customers, get that traction, get those proof points, and I think that's something that when companies raise from us, from point of strength, like usually those are ones that obviously are go on to have more success.
Yeah.
So get to that point where you can come in with a really strong story, and you don't need to to be desperate, close around really quick. Just be in that position of strength as much as possible. So
Yeah.
to find true partners.
So as one failed founder to another failed founder,
Yeah.
that's great. That's wonderful advice, right?
Sure.
But if you're out there
Yeah.
and the founders are listening, they're like, okay, great, but like how?
How?
Right? Like we're running out of money. How
Yeah.
the heck do we do that?
Yeah.
I think the thing goes back to optionality and creating optionality. So like, yeah, talking to your customers, creating more business, like doing what you're doing to make your business work.
Yep.
So that you can raise money from that point of strength.
Yep. Yeah. Yeah.
Versus just sitting there and being like, oh shit, we're running out of money in 3 months. What are we gonna do? Let's go raise.
Right. Let's make this deck pretty.
You have to
right?
find other options.
Yeah. Yeah. 100%. Right. And
Yeah.
And look, like that one, certainly the best thing to do is get paying customers.
Yeah.
Right. Too.
Yeah.
Two, but like, I've seen you can scrounge for it, right? You can help if you need to do some consulting.
Yeah.
To get, to keep the runway line, right? Like, just do what you have to do
Find ways.
and find ways, right? And like I said, it's easier said than done, no doubt about it. But yeah, if you are on those calls with investors, one, you do not want to just take any money, because there are some really bad investors out there who will take advantage of you, and kind of have that smell that blood in the water, right? Just run the business, get paying customers, and sometimes it's just like, look, maybe you don't even need venture capital at all.
Yeah.
Right. It's the best position to be in.
Yeah.
So yeah, easier said than done, though, no doubt about it.
No, I love that. That's great. I really appreciate you coming in today.
No, thanks for having me. It was fun.
Everything that we do here is about kind of more transparency for founders who are thinking about raising.
Yep.
Or who are raising right now. So I really appreciate your input.
No, thanks so much. Yeah, great questions. I had a lot of fun. Yeah, thanks for having me on.
Awesome. And I'm Helena Fogarty, and this was Inside the Fund.